Hello everyone and welcome back to the Bureau. Today we are diving into a fascinating contest brewing in the crypto space. It's not a direct battle but a competition for attention, capital, developer talent. In one corner we have the Pi Network, a project with a massive community, finally trying to build real utility through a global hackathon. In another corner we have the established giant, XRP, where large holders or whales are quietly accumulating tokens. And in the third corner, a newcomer called Blockdag has burst onto the scene, raising an astonishing $383 million. This sets the stage for a compelling showdown. Each of these developments tells us something important about where the crypto market is today, August 26, 2025. We are moving past the simple narratives of digital gold, fast payments. Digital gold, fast payments. The industry is maturing and the focus is shifting towards tangible applications, robust ecosystems, and a clear vision for what comes next. The Pi Network represents the power of community-driven development. The XRP whales signal confidence in established players navigating regulatory hurdles, and Blockdag showcases the immense appetite for ambitious next-generation projects that promise to redefine entire sectors like artificial intelligence and physical infrastructure networks. The question on everyone's mind is, who will emerge as the dominant force? Is it the project with the largest user base, the one with the deepest pockets, or the one with the most groundbreaking technology? It's a high-stakes game where momentum is everything. In this analysis, we will break down each contender. We will look at the Pi Network's strategy, investigate why smart money is flowing into XRP, and explore the technology behind Blockdag. So grab a coffee and let's get into it. First up, let's talk about the Pi Network. For years, this project has been a bit of an enigma, allowing users to mine Pi coins on their phones with a simple tap of a button. It has amassed a colossal user base, reportedly in the tens of millions, but has faced criticism for the lack of a live mainnet or real-world use for its token. To address this, the Pi Core team has launched a global hackathon. This event is a clear signal that they are shifting focus from user acquisition to ecosystem development. The goal is to encourage developers from around the world to start building actual applications on the Pi platform. The hackathon is not just a symbolic gesture, it comes with serious incentives to attract talent. The total prize pool is a substantial 160,000 PI tokens. While the exact dollar value of PI is still theoretical until the mainnet launch allows for open trading, the event is structured to foster innovation across various categories. Social media, finance, games, utilities. The idea is to create a diverse range of apps that will give the Pi coin a reason to exist and be used by its massive community once the network is fully operational. The impact of this hackathon could be quite significant for the Pi Network's future. Success here would mean transforming a passive user base into an active, engaged economy. Imagine millions of users suddenly having a marketplace of apps and services where they can spend their tokens. This could create a powerful, self-contained digital economy from the ground up. The projects that emerge from this event will be the first litmus test of Pi's viability. If developers can create compelling, useful applications, it will go a long way toward silencing the critics. However, the challenge is immense. The Pi platform needs to prove that it is robust, secure, and easy for developers to build on. A successful hackathon is more than just giving away prizes. It's about building a sustainable developer community with clear documentation, technical support, and integration roadmaps. The outcome of this event will be a crucial turning point. Now let's shift our focus to an established player, XRP. Recently, on-chain data has revealed a fascinating trend: the steady accumulation of XRP by large holders, colloquially known as whales. These are wallets holding millions or even tens of millions of dollars worth of XRP. When these large, sophisticated investors start making significant moves, it's often a signal that the market should pay close attention. Unlike retail investors who might be influenced by social media hype, whales typically operate based on deep research, long-term strategy, and sometimes information that is not yet widely known. Graph: rising number of XRP wallets holding over 1 million tokens. Date axis through August 2025. Wallets that have been dormant for months or even years are suddenly becoming active. A significant number of large wallets are increasing their holdings rather than selling. This isn't a frantic buying spree, it's a slow, methodical accumulation. These whales are not trying to pump the price in the short term. Instead, they appear to be positioning themselves for a future event, or a fundamental re-evaluation of XRP's value. The most prominent factor is increasing legal clarity for Ripple in the US. The court's ruling that programmatic sales of XRP are not securities was a landmark victory. The legal battle isn't totally over, but that existential threat has subsided for now. Whales are probably betting a final resolution is close and will be positive for Ripple. They may also be betting on upcoming technological upgrades to the XRP ledger, native AMMs, NFTs, and tokenization of real-world assets like stocks, bonds, and real estate. Or they might be front-running announcements of major partnerships with banks and financial institutions. XRP underperformed its ATH and other crypto largely due to the SEC lawsuit, creating a contrarian valuation opportunity. For contrarian whales, that's a classic opportunity. Buy an asset with established technology, clear use cases, and a company backing it at a suppressed price. They're betting that when the anchor is lifted, price could not just recover but surge as fundamentals are re-evaluated. The key things to watch: final legal developments, major banking partnerships, and on-chain adoption metrics. Next, a newcomer with a massive war chest. Let's look at BlockDAG and its $383 million statement. Now for the third contender, BlockDAG, a relatively new project, has captured the industry's attention by raising a staggering $383 million in its pre-sale. To put that into perspective, this figure dwarfs many of the most successful ICOs from the 2017 boom. This isn't just a successful fundraising round, it's a statement of intent. It signals immense investor confidence in BlockDAG's vision and technology, even before a full public launch. At its core, BlockDAG is a Layer 1 protocol that combines traditional blockchain security with DAG speed and scalability. This hybrid architecture aims to solve the trilemma: decentralization, security, and high scalability. The project claims up to 15,000 transactions per second, a top-tier performance claim. The fundraising was run in multi-batch pre-sales where price rose each batch, creating urgency and momentum. Marketing has been aggressive: Times Square, Shibuya Crossing, building global buzz. That $383 million war chest gives BlockDAG a significant advantage: runway for hiring, R&D, grants, and ecosystem incentives. It enables funding grants and incentives to attract third-party developers. The goal: build a robust ecosystem where decentralized apps sprout from the platform. In a crowded market, such capital differentiates a challenger from incumbents like Ethereum and Solana. Some call it hype, others see a credible, well-funded attempt to solve hard problems. The team is targeting two big frontiers: artificial intelligence and decentralized physical infrastructure networks, or DePIN. BlockDAG aims to build a decentralized marketplace for AI models and compute. Developers could train and deploy models on distributed machines, paying for compute with BDAG tokens. DePIN covers community Wi-Fi, decentralized energy microgrids, and distributed data storage, all run and rewarded by tokenized incentives. Imagine an AI-powered self-driving car paying for data or charging at a decentralized microgrid using BDAG tokens. The vision is a global decentralized supercomputer and infrastructure layer that democratizes AI and services. By targeting AI and DePIN, BlockDAG is aiming for markets that could be worth trillions. The $383 million is seed capital for an entire ecosystem: infrastructure, grants, and autonomous agent economies. The next milestones: mainnet launch, real-world stress tests, and the first dApps on the platform. The tech must prove performance, security, and decentralization under load. With capital, the team can hire top talent and fund R&D. But execution is the real test. It's a high-risk, high-reward bet. Superior tech and vision versus unproven scale and the pressure to deliver. Now let's put all three, Pi, XRP, and BlockDAG, side by side. Community, capital, and technology, each following a different path to influence the future. We'll compare strengths, risks, and what to watch next. When we place these three developments side by side, we see a fascinating snapshot of the modern crypto industry. Pi, grassroots community, enormous user base. Risk is execution and proving mainnet robustness. XRP, established tech, institutional partnerships. Risk is regulatory overhang and perceived centralization. BlockDAG, huge capital and ambitious vision. Risk is unproven tech at scale and execution difficulty. Each approach has merits and risks. The industry benefits from this diversity. It forces projects to deliver real utility. Watch the Pi Hackathon for the quality and adoption of apps. Can they turn millions of passive users into an active economy? Monitor XRP for final legal clarity and new banking partnerships. These will be catalysts for institutional adoption. For BlockDAG, the critical signs will be mainnet launch performance, early dApps, and real DePIN AI pilots. Ultimately, this is a race across different timelines, community first, corporate execution, and visionary technology, all competing to shape the decentralized internet. Investors should stay informed, diversify, and watch fundamentals, adoption, partnerships, and technical delivery. Whether you are drawn to community power, established potential, or futuristic vision, the race to build the decentralized internet is more exciting and unpredictable than ever. The coming months will be crucial for all three, and we will be watching very closely. Stay tuned for updates on adoption, legal clarity, and mainnet performance. Thank you for joining me today. We'll keep tracking these stories. Subscribe to stay updated.